Hello everyone, welcome to UPSC Warriors channel. This is Soundarya. So today we are going to start with our first MCQ session where we will be discussing about money, right? So in this week we will have 3 MCQs videos where we will be discussing questions related to this particular topic. Again, it is very important when it comes to prelims, and these are some of the subtopics that we will be covering under these questions. So first question, with reference to the digital credit line, consider the following statements. So this digital credit line was in news recently, and that is why I think this question is important. You have to know what is mean by digital credit line. So we have 3 statements talking about digital credit line. Let's read it now. It enables borrowers to access funds whenever they need them without reapplying for a loan. So this is where you have to give more focus to. According to this statement, it says that whenever there is a demand for extra money, without having to apply the loan again, you can simply get that money as part of your digital credit line. Okay, so it is something which is different from loan. Why? Because in case of loan, once you have taken that money, no matter what happens, you cannot go and take extra money unless and until you apply for a fresh loan, right? So this is something in contrast to your loan. Remember that. So read the second statement now. It offers a cost-effective option for managing long-term expenses. So here you have to give focus to 2 things. One is, it says that it is cost-effective. It means that probably it may have lower interest rates compared to your general normal loans. And second thing, it is helpful for managing long-term expenses. So if you have to know whether it is long-term or short-term expenses, then definitely you should have some idea about digital credit line. So we cannot take this statement in a guess, right? Okay, we cannot do guessing with respect to this statement. And third one, unlike a bank issued debt, digital credit line is a capital market instrument. So it says that if you have, if you want to get money through digital credit line, you have to access the capital market. Okay, so what are the options given here? Before that, read the statement very carefully. Which of these statements given above are not correct? So here we are asking you the not correct statements. You have to probably pick the incorrect one. Okay, so let's see the answer now. The answer is option B, that is statements 2 and 3 are not correct here. Okay, statements 2 and 3 are not correct. Why? So we will see that now shortly. So this is your statement 1. It says it enables borrowers to access funds without reapplying for a loan. Yes, true. Why? Because this is the feature of this digital credit line where you will be fixed a sum of money, say for example rupees 5 lakh as the upper limit, like how you use your credit card with some upper limit. Here the amount will be already fixed, so you can take the money as and when the need arises within this 5 lakhs. Say for example, if I am taking 1 lakh initially, then maybe after some 2 months, if there is a need arises, probably I can take 2 lakhs, okay, but I cannot cross 5 lakh. So this is how this particular digital credit line functions. But in case of a normal loan, if you have taken the 5 lakh rupees as a loan completely, you cannot go and take 1 more lakh without applying for a fresh loan, right? Okay, so that is why we say this statement 1 is correct. Moving on to the second statement. Second statement says that it offers a cost-effective option for managing long-term expenses. Definitely not so. Why? Because if we want to manage long-term expenses, then probably we will be very clear about the type of projects that we are investing in and the type of funds that we need to generate. So probably we will go for the loan only, right? But if we are not very sure about the immediate expenses that we have, if we are not very sure about the short-term expenses, if we are taking up any venture projects, in that case probably we will have this digital credit line facility useful. Why? Because we can take the money as and when the need arises, right? So this is going to offer you both flexibility as well as ability to manage your short-term and immediate expenses. So that is why this statement number 2 is incorrect. Moving on to the third statement. Unlike a bank issued debt, So this is something that can be availed by a capital market. That is not true. So both loans and lines of credit are actually, availed through banks only. But again, it depends upon your credit score. It depends upon your financial transactions history whatsoever it is. So that is why statement 3 is also not correct. So what you have to remember about this digital credit line here? So this particular digital credit line is something that is going to help you with meeting your immediate and short-term expenses, and this is again going to offer you flexibility, and this particular digital credit line will have lower interest rates when compared to the normal loans that you take, and also this particular digital credit line will ask you to pay the interest only for the amount of money that you have withdrawn, okay, not for the total sum which was granted to you. So this is all about the digital credit line that you have to know. Moving forward here from here, so the next question is about fiat money. This is the favorite topic of UPSC, because most often we get questions from fiat money, legal tender, etc., and importantly money multiplier. So what will happen if money multiplier is increasing, decreasing? So let's have this fiat money now. So with reference to fiat money, consider the following statements. It does not have any intrinsic value and not backed by commodities like gold and silver. So this statement says two things. One is that it does not have intrinsic value. What is mean by intrinsic value? If I have a gold coin with me, that coin has the intrinsic value of being a gold. Okay, that is called as the intrinsic value. But this fiat money, example, the paper currency that we have in our pockets, do not have any intrinsic value. It does not have the value of being a paper, right? So that is why we say it do not have any intrinsic value, unlike a silver coin or a gold coin, and it is not backed by commodities like gold and silver. Okay, so it represents a claim, okay, on a commodity that can be redeemed. It means that it is actually representing a claim. So for example, if I have rupees 500 note with me, okay, of Indian currency, if I say that this is the fiat money and it is representing a claim of a commodity. Say for example, if I have 500 rupees, I can take maybe 0.001 gram of gold. I can simply give my 500 and I can demand the person to give me this amount of gold. Okay, is that happening? No. Happening? So no, right? So the statement is also not true. So which of these statements? Okay, we have third statement here. The US dollar is both fiat money and a legal tender. Of course, yes. Okay, so what is a legal tender? If the government is by regulation backing any particular currency, saying you to accept that as a medium of exchange, then it means that it is a legal tender. So this 500 rupees note is a legal tender. Why? Because I have the signature of RBI governor in it. It is not having any intrinsic value, so I don't value the worth of paper that is there, but I value the sum of money written on the paper, the face value of the money, face value of the rupee. But why so? It is because it is backed by the government and it is a legal tender, right? Okay, so this statement is correct and this statement is also correct. So what is the correct answer here? Okay, so it is 1 and 3 only, that is option C. Okay, presents a claim on a commodity that can be redeemed. No, fiat money is something which you cannot, use it for redemption of any commodity. But traditionally currencies were backed by physical commodities such as silver and gold. Okay, so in the past what did the government did was the governments minted coins and printed papers, and they actually used it to redeem a certain amount of the commodity like gold and silver. But that is not happening right now, right? So that is why we say it cannot be used for redemption of any commodity. And you can have a look at some of these different types of money also. So we know what is commodity money now. We know what is a representative money, as we discussed, using it to claim a commodity. And what is a fiduciary money? Fiduciary money is something that takes its value from the trust or the promise. Say for example, you have your checks, you have your bank accounts, you have your drafts, etc. So these are the examples of fiduciary money. And commercial bank money, that is your credits and loans used to, used in the banking systems, is called as the commercial bank money. And moving forward from here, statement 3 says that US dollar is both a fiat money and a legal tender. Of course true. Why? Because US has declared that the dollar is a legal tender. See, amongst all these different types of money that I have as a government, I have the right to decide what are all the monies that I can use. I mean, I can permit for exchange of goods and services as a legal tender, right? In that case, US dollar is both a fiat money as well as a legal tender. But it was not the case before the US was actually pegging its dollar value to gold. That is something called as the gold standard system, where the country's currencies will be pegged with gold. Okay, so country's currency will be pegged with gold. Say for example, here $35 is worth 1 ounce, but after that the system was dropped and now the US government is using dollar as a legal tender. So we will discuss this in detail when we do this particular topic called as money and banking. So how this gold standard system worked, why it failed, and why in fact even England did not adopt it after some time. So let's discuss all those things in detail. And then moving on to the next question, with reference to the non-fungible tokens, consider the following statements. Non-fungible tokens provide exclusive ownership rights to digital assets. So non-fungible tokens are both fungible and interchangeable digital assets. Okay, so it is very simple that from the statement itself we can find that it is non-fungible. So what is the meaning of these two things? Okay, so let's see it now. So first statement is correct. It says that it provides exclusive ownership rights to the digital assets. So what is mean by basically this non-fungible tokens? It is very simple. Anything that you create digitally, say for example drawings, photos, videos, GIF, music, everything that you create digitally can be, actually exchanged with other people for money by making these particular products of yours as non-fungible tokens, as just the token. Okay, so which will again run through blockchain technology. If this is my product, say for example any art, if I had made this art, if I am giving some money so as to convert that art into a token and place that token in the blockchain, and so that it can be exchanged with cryptocurrencies. So if the person is having any cryptocurrency, he can get this token. So this is how this non-fungible tokens work, right? Okay, so they works on the blockchain and it gives users complete ownership of the digital asset. So if I am making this, I am the owner of this particular digital asset once I convert that as a token. So now the statement 1 is correct. It provides exclusive ownership rights to the digital assets, which means no other person other than me can claim right over this particular digital asset that I have created. What is the second statement? Second statement says that non-fungible tokens are not fungible and interchangeable digital assets. So this was kept deliberately so as to differentiate between how these non-fungible tokens and other cryptocurrencies work, right? So for example, if you hold one crypto token, say that is called as Ethereum, it will be the same as the next Ethereum that you will be holding. The values will be same, right? But in non-fungible tokens, the values will differ from one token to the other token depending upon the type of the work that I have made digitally. Say for example, each art has different price, right? So something can be art, something can also be a music or anything. So we have different comparisons here, and hence the values will also vary. You cannot say one non-fungible token is same as another. You cannot exchange it for each other. That is what you have to know here. And you can also get a question based on the same topic in this manner also. Which one of the following best describes the difference between non-fungible tokens and cryptocurrencies? Both are fungible, interchangeable. Both are non-fungible and unique. Cryptocurrencies are fungible, while this NFTs are non-fungible. Okay, non-exchangeable, right? Remember that both run on the blockchain only. Again, it is very important. And then moving on to the next question, in last few years question paper, if you have seen the UPSC question papers, we get more questions based on these models. They will give you statement 1 and 2 and ask you to find out the options, right? This pattern of questions can be seen more frequently in your previous year questions. So let's read this now. If there is a persistent foreign fund outflows from the country, the rupee value depreciates. It is very clear that when there is outflow of funds. When I say outflow of funds, I can replace that funds with dollars, right? So whenever there is outflow of funds, what is happening? The value of rupee is getting depreciated. Okay, fine. This is true. Why? If there is more outflow of dollar, then the demand for the dollars will increase or the supply of dollars will decrease. And since India being largely an importing country, obviously the demand for dollar in the domestic economy will be more, right? But when the supply is less, obviously the value of dollar will increase against what? The Indian currency, the domestic currency. So in that case, rupee value will depreciate here. Okay, and then read the second statement. The RBI buys dollars from the market, creating demand for the dollars to tackle depreciation. See, if there is a statement given here, the statement should probably be the explanation to the statement 1, so as to pick option A, right? But in the statement 2, it says that whenever anything of depreciation type happens, devaluation happens, RBI is actually doing something to tackle that. Okay, but see what here the second statement is saying you, RBI is buying dollars. Buying dollars will again lead to increase in demand for dollars. That will not tackle depreciation, that will not tackle the depreciation of Indian rupees, rather add to it. So this statement itself is incorrect. The explanation for statement 1 is something which I gave you a few seconds before. That is, whenever the outflow happens, it creates the demand or it reduces supply of the foreign currencies, thereby leading to depreciation. So what should be the correct option here? It is option C. Statement 1 is correct, but statement 2 is incorrect. Okay, fine. And moving on to the next question. With reference to UPI in India, consider the following statements. The NPCI does not allow companies in India to charge for the instant digital payment service through UPI. So we are all using UPI payments, right? So have you ever been charged for making the UPI payment so far in India? No. But are you very sure if the banks are not charging your service providers or goods providers from whom you exchange goods and services to UPI? No, again it is not happening right now because we want to push digital payments in India, but this is something which will happen very soon. Okay, so right now this is something which is not happening, so it does not allow the companies to charge. So this statement is correct, and NPCI has imposed 30% market share capital on UPI transactions volume in 2024. Okay, so it says that there has been a cap which was actually implemented in 2024. Cap on what? Cap on the UPI payments. So which of these statements given above are correct? So it is statement 1 only. Statement 2 is not correct. Why? Because we have not implemented it yet, although it was proposed. Okay, so if you see this slide, you can find that it was proposed in 2021 that by NPCI. So there will be a 30% market share cap on the UPI transaction so as to avoid the market dominance and duopoly. Why? Because right now, if you can see, you can find that Google Pay and Phone Pay are the two largest dominators in this particular region who are actually having a huge amount of market share in this particular field, right? So this is something which you have to keep a tab on. Why? Because anytime this can get amended. Okay, so this is all for today. We will continue from here in the next class, but before I end, I would like to tell you that there is a special offer that is going on because of your Diwali, where you will be getting flat 55% offer plus up to 9 months free extension at just rupees 23,999. okay, so you can use my referral code to avail this offer, which is RIYA50, and you will be able to access all these courses starting from Liberty 2026, which is a English batch course, and you have Arambam 2026, again it is English foundation batch, and you also have a Hindi batch 2026. So that's it for today. Thank you so much for watching. If you have not subscribed to UPSC Warriors channel, please subscribe, and let me see you in the next MCQ videos. Thank you so much.